Jerome Powell has officially confirmed that QE begins on December 12th. In today's live stream, I will digest exactly what was announced at the FOMC meeting just 1 hour ago. We will cover the timeline and size of this new QE program, how and why it was being introduced as not QE, they're using a different word again, the implications this will have on the global liquidity going into Q1 and Q2 of 2026, and how that could spill over to Bitcoin and altcoins. And we will briefly touch upon the upcoming rate cuts expectations, how many will there be in Q1 and Q2, as well as Powell's expiring term in May of next year to frame the whole backdrop for next year's macro, which heavily impacts Bitcoin and crypto. Okay, I've been trading and investing in crypto for the past 8 years, and if you've been following me for a while, you know I take a very data-driven and non-emotional approach to how I analyze the markets. And things are about to get very interesting over the next 6 months, especially with today's announcement. It really came as a big surprise. The Fed and Powell has been just dragging their feet for the longest time, and now we are kind of in a pickle. I think the biggest question now everyone is asking, even with all the information that's bullish coming from the Fed, is this enough? Will this be enough? On one hand, we have Bitcoin below the 50-week simple moving average, which is typically telling us that it's in a downtrend and it is in fact in a bear market. But on the other hand, we have now officially QE. So which one will trump on top, and how will the two interact with each other? Today, I want to give you guys my full plan of how I plan to navigate this and what are the exact levels, not only for QE's sake, but also on Bitcoin and on alts, that will drive my decision making on my portfolio allocation over the next, in the shortest term will be 4 months until April. And then going into June, that's another big milestone. And then towards the end of 2026, once midterm elections are here and once the new Fed chair comes in. So make sure you stick around for that, for the portfolio allocation part. Okay, let's go ahead and jump in. So what was announced earlier today? Here is the full release from the FOMC statement, and this is what's called the red line, basically what was changed from this meeting, this announcement today, compared to the September meeting. And all you need to look at are the red parts. So first, the Fed recognized that unemployment rate has no longer remained low. Unemployment rate is ticking up. So back in September, it was 4.2%. Now it's 4.4%. Clearly, unemployment is higher. So because of that, they have cut the target Fed funds rate from 3.75% to 3.5%, that rough range. So 25 bips of a rate cut, a single cut. This is what they call. Very much expected. This has been the market pricing based on CME FedWatch tool that people have given before this meeting. Yeah, if you were following the probabilities before the meeting, it was about 89% chance that this was the case. Usually when the Fed makes preemptive, signals to the market, and the market is able to price in 75 to 80% chance, that tends to be the decision. The Fed does not like to make surprise announcements like this. So the point I want to make here around the cuts and today's cut decision and the effect of this, let's just get this out of the way. The rate cuts for today has been priced in for a while because people have speculated a lot and they have come to this conclusion. And just as previous rate cuts, usually when it gets to 80, 85, 90% chance, most people have priced that in. So just because they have cut doesn't mean the market is particularly bullish. Only if they do a very rare surprise no cut, then you could say that's particularly bearish. But there is no signal to be had here with this single cut. What is interesting here is the dot plot. So let's just go over that really quick before we get into the QE stuff. So the dot plot is what the Federal Reserve Committee, Federal Open Market Committee, the economists vote on what they plan for the targeted federal funds rates to be going into the future. So this is important because here we have the September projections and compared to the current projections. So here you see the September projections have given us 3.6% of interest rate target by the end of this year, by the end of 2025. This is the median number, and we are there now. The number we have now is between 3.5 to 3.75, so right in line with that. So we have gotten there. Now, then we need to look at the 2026 projections, and the new dot plots came out the same as the September projections, which is not bullish, because this is telling us that from now until the end of 2026, the Federal Reserve Committee for now aims to have one more cut for the entirety of next year. Now, this is not set in stone, okay? Like Jerome Powell himself says, the policy rate is not a set course. It changes based on data. And each quarter, there is one more of these dot plots that come out, and they can quite often change. So what this does tell us is that at least from now until the next time that we have the dot plots, which is in 2026, March 17, 18, 2026. So for the next two meetings, the most number of cuts we can have is one. We're not going to have two more cuts. That's extremely unlikely. What the market is actually currently pricing in is about one more cut until April 29th, 2026. So over the next three FOMC meetings, there should be one more cut. That's the highest probability that the market has given it. And if you aggregate the probabilities together, you get something like this. So you see here, April 29th, 2026, we have the highest probability chance to be one more cut. So currently we are at 350 to 375 basis points. By April 29th, we should be at one more cut by then, 43% chance. There is still a decent chance that we have not had a cut by then, but very low chance that we would have had two more cuts by then. And then once the June meeting takes over, then it's really anyone's guess, because the big event that happens in May is Jerome Powell's term expires, and he will be replaced by the new Fed chair. And this could really change things up. They can spin all kinds of new narratives and change the new dot plots, etc. So this is why I'm expecting one more cut over the next three meetings, which is going to be slower than the last three meetings that we've had, which I believe each had a cut, if I'm not mistaken. Okay, so this is all of the rate cut stuff we wanted to cover. Again, since these probabilities are already here, by the time we get there, chances are they will be priced in. So the rate cuts themselves don't matter as much for, especially for crypto and Bitcoin markets. What matters way more is global liquidity, which is heavily driven by QT and QE. So let's get into that. That's the main agenda for today. So in today's red tape from the FOMC statement, you see this big paragraph that was added. The committee judges that reserve balances have declined to ample levels and will initiate purchases of short-term treasuries, shorter-term treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. In past statements, when they were in the QT reserve shrinkage paradigm, they have always said, okay, they will decrease the balance sheet by up to 5 billion per month. This was the rate that we had for the last year. So there was a cap on the rate. You see here, there hasn't been a rate. This is actually very sneaky. even though they said they're going to increase the size of the balance sheet again, specifically targeting purchases of shorter-term treasury securities, they didn't say how much. So when the statement got released, I wasn't sure if this was actually going to happen. But then we had two new developments. First, in the FOMC post-conference, I can't really find the specific question, but earlier in the statement, Powell mentioned that they will instruct the New York Fed, which is the actual trading desk of the Federal Reserve, the New York Federal Reserve, to perform these actions. And Powell didn't actually say here how much they were going to execute, or he might have mentioned like 40 billion, but he said he just briefly mentioned that they will buy treasuries every month, but for the specific execution of it, check the New York Fed's balance announcement. So I went on to check the New York Fed announcement, and here it is, released 1 hour ago. Statement regarding reserve management purchases operations. You notice here they don't say QT, QE, anything like that. So here's what it says. Monthly amounts of RMPs will be announced on or around the 9th business day of each month, alongside a tentative schedule of purchase operations for the subsequent approximately 30 days. And the term here, RMP, you got to really remember this, reserve management purchases. This is the new term that they're using for QE. They're not going to say it's QE, but I'll show you the clip just in a bit when Powell actually answered a question directly related to this. He specifically says, we used to be in this QT environment and bank reserves are getting drawn down. And once the reserves levels were low enough that they called ample, now we need to do the opposite. He didn't use the term QE. He said reserve management operations, reserve management purchases, RMPs. This is the opposite of QT by his definition, which is QE. But he cannot say QE because remember previously he said they can't do QE until rates are at zero, but now they're doing it, just in a different term. Okay, what else have they said at the New York Fed trading desk? So on the 9th business day of each month, they will announce how much they will be buying in terms of treasury securities in that month to add to the Federal Reserve's balance sheet. And they will release the first purchase schedule on December 11th, tomorrow. And the total amount will be about $40 billion in treasury bills. Remember this number. Purchases will start on December 12th, hence the title and description of this video. The desk anticipates that the pace of RMPs will remain elevated for a few months to offset expected large increases in non-reserve liabilities in April. I have found exactly what these non-reserve liabilities in April means according to Powell's Q&A, and I'll show you that clip in a bit. But remember, so basically this sentence says the 40 billion per month that they're going to be buying for the Federal Reserve balance sheet in treasury bills, that will continue every month until April. Remain elevated for a few months around these same numbers. So 40 billion per month until April. After that, the pace of total purchases will likely be significantly reduced in line with expected seasonal patterns in Federal Reserve liabilities. But note here, the pace of total purchases will likely be significantly reduced, but not going back into QT again. And as we know already, the Fed doesn't just flip-flop all the time. Going from QT to QE is really the shortest it has been is like 3 years. It's usually a 3 to 5 year type of pivot. The timeline is very long and they only go one way or the other. And once they start QE, they don't randomly stop and go back to QT. So QE is going to continue. It's just the amount of it will reduce after April. And finally, purchase amounts will be adjusted as appropriate based on the outlook for reserve supply and market conditions, basically listening to the Fed again. Okay, so here is the impacts of this on the markets. let me bring up my trusty chart here. First, let's cover, let me just show you this clip right now of the actual meaningful clip that Powell mentioned. It completely confirming this, okay? I'm going to play this myself and I will make sure you guys can hear this as well.
Just on the ample reserves point, how concerned
Okay.
And were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it.
Okay, so I'm just going to go explain this like line by line. So basically the reporter asks about money markets, aka how banks deal with each other, how they lend and borrow with each other, how their reserves are doing, or in general, how liquidity in the US banking system is doing. And Powell here says, okay, that's related to QT, and we have been in the QT environment for a while.
And nothing happened. The overnight reverse repo facility went down pretty much close to zero.
Okay, so overnight reverse repo facility we have covered many times. This is the cash that US banks can choose to park at the Fed to have risk-free yield. So when the overnight reverse repo facility goes down, that means the US banks are withdrawing the cash from the Fed into their own accounts to be used as their day-to-day operations. And when that goes down to zero, that means that liquidity has all been used up. And we've known this because at the peak of the last QE cycle, it was over $2 trillion, and now that's at only 10 billion or so, so nearly zero. So that part of the liquidity has been drawn down, and that contributes to a shrinking of central bank liquidity, as we have covered many times, and as Powell confirms here.
And then beginning in September, the federal funds rate started to tick up within the range, right? And
so he says the federal funds rate ticked up within the range. So remember, when the Fed has a targeted federal funds rate, it's a range. In September, it was between 3.5 to 3.75%. And when it ticks up, this means they're losing touch. They're losing they're risking that the interest rate that banks set on each other to borrow from is potentially going out of the range. And this is heavily related to the regular repo operations that usually are not used at the Fed, but when the liquidity in the US banking system is under stress, it is being used. So we have covered this, for example, on the last couple live streams where we have shown that. I'm just gonna show you right here. So on this live stream, and I believe like these two live streams, we show that the standing repo facility at the Federal Reserve was being used in September, because this clearly shows that the US banks are running out of cash and they need to borrow overnight from the Fed. So Powell confirms that he recognizes this was being used, which tells them that the US banks have not enough reserves. Liquidity is thin in the system, and thus they need to do something.
Ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime.
So ample reserves regime is his term of saying low. It's getting tight. The liquidity is getting tight.
So, you know, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, you know, we announced.
So specific actions today.
Announced that we're resuming reserve management purchases.
This is pretty nuts. What did he say before? He said they can't do QT. They are in QT, they can pause QT, but they cannot do QE until rates are at zero. But now he goes complete 180 and says, hey, we're resuming this reserve management purchases, which was never even a thing, never a term mentioned anywhere before. But now they just pull this out of the hat and says, we're going to do it.
That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big?
So, see, that last comment there is pretty crazy. He says we are doing reserve management purchases. That's not monetary policy, aka not QE, but we just need to buy more. he just says that, and he also addresses why so large.
The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
So this is his excuse. I found it kind of funny. It's actually very similar to the 2019 repo crisis repeat, where they really had no choice but to step in and help the US banking system have enough liquidity by increasing the balance sheet, just randomly starting it. And this time around, they're using the word RRP to say it's not QE, even though it is QE. And the excuse that they're using is the United States tax deadline's April 15th. So the reason why this is silly is because, there's a tax deadline every year. So why don't they do this every year? It makes no sense. Everyone knows that he has to say something, and nobody really blames Powell here. But yeah, you see he's kind of stuck in a pickle here. He has to pick something, and this is what he picked to say here. Obviously, this is silly, because if this were true, then they would be increasing the size of their reserve every year from December to April, but they don't. So why don't they do it? It's clearly because of liquidity, not because of tax day. So just something to keep in mind, but this is a very similar repeat of September, October 2019. Okay. And that's the most important confirmation of what this is. RMPs is the new QE. Here, Bloomberg says Fed says it will begin Treasury bill purchases on December 12th. Here's the exact statement coming from the New York Fed. Here's Powell officially confirming it on interview, even though he can't use the word QE. You see, he specifically does not mention the word QE, even though he says QT. And the opposite that they're doing is RMP. Okay, so with this now being in place, and they will start doing it, how big will the impact be on the markets? So let's go into the charts a bit. And I want to frame this in a few ways. So first, let's look at the balance sheet of the US Fed. So here is WALCL, total assets minus, total assets less elimination, less liabilities. So this is the size of the US Federal Reserve balance sheet. And you've probably seen this wave, this graph on many different websites, on the Fred website, etc. This is just a way to chart it. So how big will this new round of QE be? Well, we know that it starts on December 12th, which is roughly here. It only goes by week per week, but roughly starts here. And we will go towards April 15th, the tax day. And the amount is roughly $400 billion per month. So this chart here, the price scale here is in trillions. So 40 billion per month is 0.04 trillion per month. So that means that number will go from 6.54 trillion right now to increase 0.04 trillion over 4 months. So 6.54 plus 0.16. So that brings us to 6.7 if my math is correct here. So that's the curve. From now until April 15th, that week, this is what that curve will look like. So we know this now. Actually, we no longer have to guess because they have announced this. Roughly what we'll have is this will flatten out and then it will go up like this over the next 4 months. And if you zoom out long enough, you see the effect of this. At least for the next 4 months, this effect will be very similar to the same shrinkage effect we've had from the Fed's balance sheet over the past 12 months. So this is very significant. This will basically look like a V-shape reversal right here. It's not as much as like earlier parts of QT where, you know, the shrinkage was a lot faster, but it certainly is quite big. Notably, okay, I've drawn this extending all the way up, but you shouldn't take it like this. The only thing that they've announced is for sure is this, right? This portion until April 15th. After that, it will still go up, but whether it's like very slow curve or faster or exactly following this, nobody knows. We do know that it's not going to go up here and then go down. That very rarely happens. That basically has never happened before. If they officially announce a new round of purchases, this has never happened before. But we don't know exactly how fast or how slow it will be after April. And even this line might be like, you know, too optimistic. For all we know, it could be like very minimal, but that would still be slight QE. Okay, so they will keep the purchasing as we've seen earlier on the New York Fed's announcement, but exactly how much after April, we don't know. We do know that the curve will follow this until April 15th, which is significant. So that's number one. And if you guys don't know already, Bitcoin and especially altcoins really like to follow global liquidity and hence the size of the Federal Reserve's balance sheet. So I'm just gonna do this really quick. If you overlay this over on top of total 3 compared to Bitcoin ratio, and then you have here, I'm gonna only take this Federal Reserve's balance sheet, see the same curve as before. So the two bottom out and top out around the same time. Since we will have this tick up, this purple indicator line tick up around the same curvature over from now until April. So only until about here. So we should have a relief rally at the very least. Okay. Now, exactly how much, how meaningful is this? So if you only look at the sides of the Fed's balance sheet, this is very meaningful. It is. But remember, the Fed is not the only place. And this is only the balance sheet itself. So there are 3 parts of the Federal Reserve's liquidity. So the US central bank liquidity. And these are here, the Federal Reserve System, aka the balance sheet, the TGA account, and the reverse repo facility. So when you check all 3 of these, you have this chart here. And I wanted to compare how big this is compared to the total size of the US central bank liquidity. And thus, we can then say, okay, is this going to make a meaningful reversion in the US central bank liquidity and thus signal to the rest of the world, to the other central banks, for them to potentially reverse course as well. So if we only take this 160 billion increase over the next 4 months, that looks like this. Okay, so I'm going to zoom this out a bit. This purple line here, this is the US central bank liquidity. So that currently is at 5.6 trillion. And from now until April, that will be at least 5.76 trillion right here. So the line looks like this if we only take into account the balance sheet increase, which is not enough to get to early 2025 levels. You see up here, not enough yet. So in order to get up here, we also have to consider the other two parts, which are the reverse repo facility, which is now drained. It cannot add more liquidity using that. So the only thing that can add liquidity is the TGA account. So then, what do we have in the TGA account? Well, we have covered this already as well in the last few live streams. So this one right here, especially, we have covered the TGA account. So long story short, the TGA account is the checking account of the central bank, of the US government that's kept at the central bank, kept at the Federal Reserve. And currently that sits at $937 billion. It's roughly the same number of this indicator if you only check the TGA account, okay? You only take this. That's negative 0.94. I'm gonna make sure you see this number, negative 0.94, which is the same as negative 0.94 trillion, aka $940 billion in the Treasury General account that's out of the system, aka a negative in liquidity. So how much can this increase? You should check that live stream that I just mentioned. In short, there are a few scenarios. So first scenario is the Treasury General account, based on the last time that the Treasury themselves have given projections, they want to keep it at around $850 billion in the Treasury General account. So from 937 billion to 850 billion pre-government shutdown. So remember, before the government shutdown happened, they were at 850 billion, and that was the target that they wanted to keep. If we go back to that number, that's roughly just under $90 billion. This is the low number of liquidity that could be injected into the system. So back to this chart, I'm going to bring up again the central bank liquidity in total across all of the US, three parts of the US central bank. Okay, so we have this going from 5.6 to 5.76. After this part, after this increase happens, we could have at least another 90 billion coming from the Treasury General account, which brings us to 5.885 right here. So let's say we get that by the time that the midterm elections really start to kick off, and the Treasury has to use this in one way or another. So most likely they're going to use it to fund the tariff dividend, but that would be enough to continue this curve for at least a little bit more until June, July of this year. Now this could come earlier. Let's say they use this TGA liquidity before that, then this curve will potentially get increase a little bit faster, like this, from now until April as well. This could be the case as well if the TGA liquidity and the QE liquidity comes out at the same time. Okay, so taking into account these two together, this is the base case of liquidity we should have by midterm elections. Let's say June, July, after the campaigns start, after Powell's term ends, liquidity should reverse to these levels across the US central banking system, which is towards these resistance levels up here. This is the base case. This is not including the tariff dividends, because the TGA, even if it just goes back to normal to reverse the government shutdown effect, it will bring us here. So would this be enough to recover the entire market? Probably not, because back in June, July, central bank liquidity in the US were a lot higher. So I don't think this will be enough, okay, if we only have this scenario. The good thing here is that we could have quite a bit more coming from the TGA account. So you guys might not realize this, but the tariff dividend that has been proposed by Trump, this is going to happen in the middle of 2026. The rough term is Q2 to Q3 2026 that they said. So the amount that will come out of this is at least going to be equal to the total tariff revenue in the year 2025. That only makes sense. So in the year 2025, the total tariff revenue was $215 billion. And guess what? Where is this tariff revenue stored? It's stored in the TGA account. So this directly feeds into the increase of this indicator, this US central bank liquidity, because once they get the approval to spend, to give this tariff dividend, whatever the amount is, that will be draining out of the TGA account and going into the US central bank liquidity. And so this is kind of the median case that I have, which is about $215 billion of increase in liquidity coming from the TGA, not 90 billion over the next 6 months. So if we have this number, so the scenario for this is Trump proposes a tariff dividend using the year 2025's tariff revenue, and it comes out of the TGA account because the money is actually there. It goes into $2,000 per check into qualifying Americans. And what would that lead to on the liquidity chart? Well, that will add another 0.215 to this number, which is going from 5.75 to 5.96 right here. And that could go in multiple ways. It could go, extend slowly from April until the end of 2026, or it could be very sharp from now until April, or it could be somewhere in the middle like this. But the liquidity should be able to get to these levels, in my eyes, by, let's say, Q3 of next year, as long as we have any form of tariff dividend being passed in the legislative system. So if that happens, that's great. And this is kind of my average case expectation for liquidity to get to these levels. If we get here, I think Bitcoin has a good chance to get to the 50-week SMA and potentially, 20-week SMA. I don't know if that will be enough to reverse the drawdown entirely and bring us to all-time high. I don't know about that. But at least that will be normal levels, similar to earlier this year. Okay, this is kind of the medium case. Now, there is also a very optimistic case, okay, which is this. So if you look at the actual, bigger promise of Trump, he says that there will be a one-time $2,000 per person rebate with an income limit of $100,000. So anyone that earns an income below $100,000 would receive $2,000 as tariff dividend. This, based on how many Americans actually qualify, would cost $450 billion. Now, this would totally take up the estimates of 2025 and 2026 tariff revenue. So this will even eat into next year's tariff revenue. So basically the TGA account does not have this money yet. So where are they going to have this? They can't really justify this that easily. They will need to eat into other parts of the TGA budget. But nonetheless, this will be a much more bullish scenario if Trump actually gets this whole thing approved. If that happens, then that equals to, first we have the 160 billion of new liquidity from the Fed. And then we have the 450 billion from the TGA, which will bring us in total towards 6.21 trillion of central bank liquidity. 6.21, which would be up here, all the way up here. So erasing all of this downward liquidity pressure since July. Now, this isn't going to happen right away. If this comes out like from now until April, if we have the full $2,000 check for most Americans earning below $100,000 by April, then this will happen. But highly unlikely for that to happen. If this happens towards, late stage of next year, then that could be something like this, where it goes up here, this gets approved, and then it trends up like this. Again, this is a much, much more optimistic scenario. They need way more approval, spending more than they have collected in tariff revenue, but they could do it. This is actually what Trump has proposed. So if this happens, then maybe Bitcoin could reach a new high, because look at these highs, okay, in terms of Bitcoin's price when we had these peaks of liquidity. So peaks of US central bank liquidity. So let's look at it this way. We bring up the Bitcoin chart and then we overlay it with liquidity chart. So up here, liquidity peak, Bitcoin roughly peaked, right? You can say it was this peak, you can say it was this peak, but certainly it needs to be higher liquidity conditions. So unless we have a full reversal of US central bank liquidity, I think it's too early to call for just the next 4 months of QE to reverse the entire drawdown that we have seen on Bitcoin over the last, actually just 3 months. So we really need to see how, we actually need to watch this tariff dividend. This is the next big thing that can contribute even bigger. The reason why this matters, okay, is because when you look at how the liquidity conditions have been, not only for Bitcoin, but also for alts, when you look at total 3 excluding stablecoin compared to Bitcoin, this doesn't exactly follow the US central bank liquidity, but what the US central bank liquidity tells us is how the rest of the world will act. So the way I see it, if we cannot have a reversal of this big drawdown on the US side of central bank liquidity, then we are unlikely to have a global liquidity reversal that can bring us to new highs like this. Okay? And this is what's required for alts to truly pop. So obviously the numbers alone from the US side would not be able to account for a full reversal on the global side. You see the global liquidity side, if we get to a new higher high, that is another, that needs to go from 29.3 trillion to 30.15 trillion. That requires, how much this? 840 billion dollars of increase. And even if we have the most optimistic side on the US central bank liquidity, that's only 450 plus 160 is 610. So that would not be enough. But if the US is able to reverse course this entire way, then chances are that will be a signal for the other central banks to follow suit. So that's why I think this all ties together. First, what have we covered today? We covered that what we know for sure is this increase following this curve on the US Federal Reserve balance sheet will happen. And then we know that at least there will be a little bit of a bump of liquidity that will come from the TGA in $90 billion sites. And then after that, after April, it's anyone's guess. If Trump doesn't get a tariff dividend approved, then the TGA account will have a harder time to inject more than $90 billion into the system. But if he does get at least some form of tariff dividend approved, that should be about 200 billion, which will bring us to kind of the low end of the US central bank liquidity over the next, let's say, 6 months, like this kind of a curve. And if Trump gets his entire tariff dividend approved, then that will be bigger. That will be a bigger stimulus coming from the TGA account, adding on top of the Fed new form of QE, which will bring us to these levels. And if we get to these levels, then because the US would have reversed this entire drawdown of their central bank liquidity, that tells me that the rest of the world's central banks will likely follow suit, excluding China, that is. But the other central bank, the ECB, the JGB, will likely have followed suit and brought back up the total global liquidity to match these highs back in April and back in June. And if you remember our videos from back then, we were really looking at this. If we can get to a macro, uptrend in global liquidity again, this needs to get broken. And we need to break above this in order to have new highs. So that's why all of this ties together. Okay, so to summarize, what have we covered today? Over the next 4 months, the US central bank liquidity will increase based on this exact number. This is the exact projection that they have given, which means we will see a bump, a rebound on Bitcoin, albeit slowly. It's not going to happen today, this week, whatever. It happens from now until April. And we should have a rebound on alts as well, because alts follow the Fed's balance sheet and it follows global liquidity, very simply put. And global liquidity very closely follows the movements of the US central bank liquidity. Okay, so that's the base case. We know this will happen. Exactly how big will this size be? In my opinion, if we only have this bump like this on the Federal Reserve's balance sheet like this, then this would not be enough to reverse course all of the liquidity drawdown that we have seen on all three parts of the US central bank liquidity, which means we are unlikely to get to a new high on Bitcoin, and it will unlikely be a new high on alts. So probably not alt season just because we are in QE if we only have this bump in liquidity. However, there are other things. For example, if we have a bigger injection from TGA, whether that's 200 billion in a average scenario by Q2, Q3 of next year, or if we have a 450 billion injection from the TGA by Q2 or Q3 of next year, then that will be much bigger. If that happens, then the entire drawdown of the US central bank liquidity would have been reversed. And that, in my view, should be enough to get us to retest the previous all-time highs on Bitcoin, which then we can only then consider, okay, has the bear market ended? And is this just a very short bear market? I know this is what everyone wants immediately to know right now. Okay, since we have QE, does this mean bear market has already ended? The answer is probably not yet. Okay, if we only have this QE based on the number that they have put out, we will have a bounce, but my base case is still that from now until April, we should be able to see us revisit the 50-week SMA, but probably if I were to guess, it would still be a rejection if we don't have any other forms of QE. But of course, many things are on the table now. Because once the Fed announces QE, it will continue. It's only a matter of how slow or how fast they do so after this portion ends in April. So after April ends, it's really anyone's guess. If TGA injects a lot, tariff dividend comes, and Powell gets replaced, and Kevin Hassett comes in and says, hey, we're going to do way more QE, then yeah, of course, we can reverse course. But from now, we don't know yet. We're not able to confirm that. So this is my base case on Bitcoin. And I personally, if we are to reverse course completely to say, okay, this is all the bear market we're going to get, then not only should we not get rejected by the 50-week SMA, we should also try to close above the 20-week SMA, something like this. So I would say 105, 106K, probably way more convincing. If we can get that high by April, all bets are good. Jump back into the market, bear market's over. But until that happens, still betting on a strong bounce, but not the end of the bear. Okay, that's my base case. But if anything, with all the context I wanted to give you guys, right, a lot of good things could come out. It's just none of it has been confirmed yet. So we have to play it one step at a time. We have to really follow what liquidity is confirmed. And the only liquidity is confirmed right now is this 4 months of QE, which should be enough to get us back up here. And then it's anyone's guess. I think that's a very fair assessment. Okay, so that's on Bitcoin's effect. Now on alts, usually alts follow global liquidity, which follows central bank balance sheet of the Fed. The problem is that Bitcoin is below the 50-week SMA, like we've just shown. So unless we can get Bitcoin to close above the 50-week SMA and likely above the 20-week SMA, I'm not too confident in holding alts. I'm still trading them, like I have mentioned in the past few live streams, 80% Bitcoin, 20% alts. I'm very happy for my 20% alts exposure because those will do well from now until April. But that's still trading. If we are to see an altcoin exposure reversal and potentially altcoin season again, one of the other main criteria is Bitcoin needs to be an uptrend. And in order for Bitcoin to be an uptrend, it needs to break back above 50-week SMA, ideally 20-week SMA. So yes, we could see a path to get there now. And I know people are going to say this, okay? They will look at this this chart, okay, on the balance sheet like this, which is this exact indicator. And in a few months, right, they will say, hey, look, balance sheet has gone up like this, like people have expected for 4 months. And obviously alts will take up a bit like this. And then this is the decision point, right? But then people will say, just in case, right, way more liquidity comes and then alts actually happen to be an altcoin season, people will say, hey, look, I can't believe you didn't buy alts when Fed announced the QE. But the problem is, we only know that in hindsight, do we? We know that there will be a bounce. That much is for sure. There will be a bounce in Bitcoin, there will be a bounce in altcoins. But can this be enough of liquidity to drive a bigger altcoin season? That has prerequisites. And the prerequisite is whether that comes from, bigger TGA injection or, the Fed decides to do more QE. If they do one of these things, then Bitcoin needs to be in a new uptrend. And then this reversal on, let's say, Bitcoin dominance won't stop here by April, and then it will continue. So from now, we only know there will be a bounce. but I cannot honestly tell you, hey, this is the start of new alt season. It could be. It really could be. And we really have to keep an open mind. Maybe this is the bottom of alts. Historically, it has been the case. That is true. I'm going to say this right now. Historically, this is the exact chart I have shown you guys many times before. Total 3, excluding stablecoin compared to Bitcoin, tends to top and bottom when balance sheet tops and bottoms. And if you use Bitcoin dominance, it's the reverse, but they're the same. Yes, this could totally be the bottom. If you want to just be the earliest buyer possible in alts, sure, you can go in alts right now. But all I'm saying is, from now until April, you might as well just bet on a bounce for now. And then by the time April rolls around, there are so many different moving pieces. You can reassess how the next liquidity wave will be. Is there a tariff dividend approved? How big is it? Will there be more QE? How big is it? And then you can decide, okay, I have had a little bit of exposure trading alts from now until April. Once we are in April, do I want to have bigger exposure in alts? Or do I want to scale back if no more liquidity will come out in the short term? I think that's the way I want to look at it. Bet on there being a bounce. I know this much. But whether this is the start of a 1 year long alt season, 1 year long full reversal, it could be. Keep an open mind. But too early to make a full confirmation. If Bitcoin can fully reverse, then all bets are on. Like by that point, it still wouldn't be too late to get in. Because Bitcoin is barely 10-15% away from confirming a reversal. So I think that's a more fair way to look at it and safer way to look at it. So that's what I want to say. Definitely, it's improving. It's improving for sure. If anything, you don't want to say, hey, this is going to be extended bear market. Alts are going to die forever. Like Bitcoin is going to go down much further. That's not the case. But exactly how long it will take for this to fully play out, I don't know. I think betting on a bounce is the right play right now, from now until April. Thank you guys for the questions and for joining the live stream today. Before I go, make sure to follow me on 2 places. Number 1, follow me on X at VirtualBacon0x for day-to-day alpha. As I'm trading altcoins especially, those trades will go on X first before I have time to do live streams. And number 2, check out our trading bots with the link in my bio. First link in the description with our sheet covering all my current positions that I'm taking, especially over the next 4 months. That's still the main strategy I'm going to be doing. Every month, I want to trade alts that I only plan to hold under 1 month. Try to only hold them 2 to 3 weeks at a time and rotate into Bitcoin. Mainly try to take advantage of the Bitcoin bounce and then wait until this QE portion finishes and see how strong the bounce can be on Bitcoin before we make the next major move on our portfolio. Okay, that's it. Thank you guys for watching, and I'll see you on the next video and next live stream.